All right. Good morning, everybody. Today, I want to get into exchanges in light of what's going on with FTX and how we even got here, right? So how we got here, exchanges are somewhat of a necessary evil. They came about because in the beginning, when Bitcoin first came out, it was built as a peer-to-peer network, which means that if you wanted to buy Bitcoin, you had to buy it from somebody who already had it. Or in those days, most people that had it were the miners. Those were the first kind of entry point into Bitcoin. You could certainly buy Bitcoin, but you would have to know that person, set up the deal, and then trust that they actually send the coin once you sent them the money. And that's really how exchanges came about, because back in the day, and trust me, I was there. I was part of these deals. We would create these OTC deals, over the counter deals, or face to face deals. But back in the day, you would just arrange where you're meeting with somebody who actually has the coins because they were either a miner or super early into the game, and they had a bunch of Bitcoin that they were willing to sell at a price point or a fee, a transaction fee. The people that were selling it determined the price that you would pay for it, right? So if it's my Bitcoin, I would say maybe 4 to 10% higher than market if you want to buy it from me. And that's how it would go. And this was a Mexican standoff of coordinating the right deal for the right price with the right people, and then making sure that they actually receive the funds. And then, of course, that they actually, the seller actually sends the Bitcoin. So that's what the process was. Now, that was really Wild West because you really didn't know who you were dealing with. Then along came the exchanges. Brian Armstrong over at Coinbase decided to create up this centralized setup where you can have an entity to trust to facilitate the sell between buyers, or the transaction between buyers and sellers. And so that had a real familiar feeling, because that's how we trade other assets. That's how we deal with the banks. We use a centralized entity that we go to and become a client of, and we start to trust them to do all that. All those things for us. And so that's how these centralized exchanges came about. Now, fast forward to 2022 and what happened with FTX, you were onboarding onto a centralized entity to use the decentralized asset. And when you did that, you were giving up the rights to this asset to this third party. And this allows this third party or this entity to do whatever they want with those coins, because on the screen, they're just showing you their ledger internally that represents the amount of coin that you bought from them. So when I log in, I can see my account, but really it is their coin, because it's sitting on their wallet address, and I don't own any of that. It's really there on their exchange. So with FTX, what they started to do is, and in exchanges in general, FTX just got big fast. And what exchanges in general were starting to do is dangle these carrots. In the beginning, it was the ability to purchase ICOs. And as that started to progress and the exchanges make money, now, mind you, exchanges make money by transacting. They collect a transactional fee. And so they were giving you convenience at a relatively low cost, without really educating their clients that the assets that they're purchasing or storing on those exchanges now really belong to the exchange. But anyway, they were dangling these carrots in front of the customers, things like low transaction fees for purchasing assets. Then it became access to ICOs that were coming to marketplace. And these were projects that were new to the marketplace, that you may or may not have actual legs or a runway to fulfill the use case that they were presented. This then turned from ICOs into things like staking. Staking, once it became available on the particular blockchain, you can typically stake with them, and they would give you a portion of the percentages that were earned from that staking. And I'll do a whole nother video on staking, but exchanges now offered staking, where you can purchase the asset from them and then stake it with inside them, and you would earn an interest rate pretty much higher than any interest rate you were going to get at a bank. And then they offered lending products. Now that is where we get into trouble, the lending product. So the lending product essentially allows us to use our assets, our digital assets, as collateral, typically 40% loan to value of whatever asset you're depositing on the exchange. And they would give you or let you borrow against your own asset, where you're capable of borrowing fiat money against your digital asset. And it's great because, from a tax benefit, You don't pay taxes on debt. You don't pay taxes on anything you borrow. And that's what a lot of folks did. So by putting your assets on a centralized exchange, you're allowing them to hold it. You're giving them the responsibility. They own the keys. And as I mentioned, it's a necessity. It is required. Otherwise, you can use an OTC like myself, which means we're private brokers. We can help you buy and we can help you sell using our licensed banks. So a licensed bank is a bank that you typically register with FinCEN. You have a money transfer license. And so that's a service that we provide here at CoinBridge. We use our machines as an easy way to purchase Bitcoin and eventually sell Bitcoin. And so the ATMs and the peer-to-peer folks, that's how this whole thing started, or at least have the easy ability to purchase and sell your Bitcoin. And then the exchanges came in, making that process a little easier. The caveat was that you're giving your assets to these exchanges and hoping that they do well by them, because the exchanges are necessary. I spoke a lot about the on-ramp of purchasing digital assets through these exchanges, but how about the off-ramp, right? A lot of people come to this industry in this space purchasing coins expecting, or at least under the assumption, that their asset will appreciate. Now, I'm going to specifically talk about Bitcoin because Bitcoin is predominantly deemed as a commodity, as an asset like gold, silver, or precious metals. The other coins are TBD, are still to be determined. So right now, I'm just going to specifically talk about Bitcoin. Now, your Bitcoin will eventually appreciate. That's what it does. It's an asset that has a finite number. There's only 21 million Bitcoin that will ever exist, and there's roughly 8 billion people. So as adoption starts to increase, you're going to get a usage demand for it, and that's what's causing the price and volatility. Now, people that have the Bitcoin, that have already owned it, these are miners, these are folks that got in early, these are people that have accumulated over the last 14 years that Bitcoin's been alive. They're the ones that can easily go to the exchange and just sell to the market. And as you sell it back into the market, that's what decreases the price, or at least gives you that volatility that that Bitcoin's kind of used to. And so that's the off ramp for exchanges, and that's why it's necessary. So even if your Bitcoin, let's say you've been accumulating over the years and you finally reached a goal of X amount of Bitcoin, which has a market value of, let's say, $1 million. Well, that's just $1 million on paper. How do you get that back into your bank account so that you can actually enjoy the fruit of your harvest? You need some type of off ramp. And if you don't know a private broker like myself, then you're most likely going to use an exchange. And that exchange or private broker allows the ability to buy your Bitcoin and sell you and pay you in some type of cash or wire. But they have to be licensed, because otherwise, if you're not licensed, it really does become a different type of sell. So anyway, that's the story with exchanges. That's why we need them. That's why they're kind of a necessary evil. Otherwise, contact somebody like myself here at CoinBridge Partners. We can help facilitate the buy and sell of your Bitcoin, of course, at a transaction fee, usually cheaper than what we have at the ATMs, but we do have minimums. Typically, to work with an OTC broker, you need a minimum of anywhere between $15,000 to $25,000. Our minimum is smack in the middle at $20,000. So if you're looking to buy or sell $20,000 or more worth of Bitcoin, give us a shout. Go to CoinBridge Partners, or you can give us a call. All right, guys, thanks again.